Welcome to Larking Gowen Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Good morning and welcome to the Larking Gowen post-budget podcast. My name's Dominic Carter. I'm a tax partner at Larking Gowen and I'm joined by our VAT Director Gilly McGill.
Good morning.
Good morning, Gilly. We've talked a little bit since the budget and you've made the initial observation that there was very little VAT content.
Yes.
But you do have some interesting reflections now you've had a chance to think about things from with the benefit of hindsight.
Absolutely. So everybody else in tax was very preoccupied and in a flurry of excitement about the budget. And I sat with my arms folded with nothing to do until I realised that actually the fiscal drag impact, particularly with VAT, is quite astounding for taxpayers. And then having spoken to you, Dominic, we realised that there's a real impact on fiscal drag across all taxes at the moment. It seems to be a bit of a theme for the government that we have currently. So we thought we'd talk about that today and I guess what it means and where it impacts businesses and individuals in their taxes. So fiscal drag is a concept really where tax is not necessarily being increased, not at a headline rate anyway, but the effect because of inflationary impact is such that more tax is paid to the Treasury and more taxpayers are dragged into the tax system because of a failure to increase certain aspects of tax in line with inflation. So the one that really strikes me, of course, is the VAT registration threshold, which has been at £85,000 since 2017. So, that's a very long time not to increase the VAT registration threshold, and many more businesses will be being pulled into registering for VAT and therefore charging VAT to their customers and paying it over to the Treasury than would previously have been the case.
That's really interesting. So that's 5 years that threshold that we would have been accustomed to seeing an increase in each year has remained static. And how do the government justify that?
Well, in truth, and they're quite right in saying this, we have got one of the, if not the highest threshold for VAT registration in the world. So it is a very generous limit, and many other countries are in the few thousands rather than 85,000. But nevertheless, it is really impeding some businesses' growth. So they would naturally perhaps have been looking to grow year on year. And suddenly they're faced with this cliff edge once they reach £85,000 of sales of having to VAT register and in their minds give away some of their takings to HMRC.
I see. So that's why my builder wants to come and have me secure all of the materials so he can come along and do the work and invoice me for that rather than...
Absolutely.
Oh, I see. Yes.
It's a classic example. And interesting you talk about building because one of the other, really noticeable thresholds that has not increased in the VAT world anyway is the capital goods scheme threshold, which works to require businesses to monitor the use of buildings and building work for a 10-year period. And the limit to being within that monitoring requirement has been stuck at £250,000 of spend since, I think, 1990. Now, what can you really buy or construct in a building context or a land context for less than £250,000 now? Not an awful lot, I would suggest.
No, I guess at the time that was introduced, you could have had a complete building of some kind, whereas now
Yeah.
you'll be looking at any substantial refurbishment or enhancement of a building is probably also going to come within the capital goods scheme.
And again, it's adding complexity, isn't it, to the tax system, where people are crying out for some simplification and pulling more taxpayers into complexity who are perhaps struggling just to keep their business going.
And 10 years is really quite a long period of time, isn't it? It's longer than ordinarily taxpayers would be expected to retain records. And it must be quite easy for these sort of things to be overlooked.
In a 10-year period, most businesses will have had a relatively regular turnover of staff. So that corporate knowledge of what's gone on in the previous years will have gone. And of course, as accountants, we may be looked at and to keep those sorts of records. But again, 10 years is out with the normal requirement to keep records. 6 years is what we're used to. So it's a real challenge for businesses to first recognise that they need to do this, and then actually to ensure that they are doing it in a meaningful way.
And I suppose unless you've got a really good firm of accountants like Larking Gowen that you'd be loath to depart from, you may have changed your accountants 3-4 times within that 10-year period. So not easy at all. And I've got some examples of this. As you know, Gilly, I'm more involved in working with corporates than individuals, but both of them do become relevant. On the corporate tax front, we have got a situation where actually we do have an increase in the tax rate. The main tax rate for companies will go up to 25%. We had a situation whereby it was going to go up, and then the Liz Truss's government said that it wasn't going to, and then that was reversed by the current government. But that 25% rate is a sharp increase from the 19% before. We have experienced rates at that level before in the past, but I think the combined impact of lots of other changes in the corporate tax system is going to make that a more significant burden to businesses than the last time we had rates at those levels. I think it just goes to show that when you've got something that's set at a particular level or a rate at one point in time, the impact of not changing it or it being the same at a later point is, it can actually be a very different situation.
And how does that sort of headline 25% rate fit in sort of globally? Are we unattractive at that sort of level then as a country?
The 19% that we had was one of the most competitive rates in whichever suitable benchmark you wanted to pick. So if there was a tax that you might have thought would have been increased, corporation tax going up to 25% is probably not the most shocking example. And there are some there is provision for smaller companies to pay at lower rates, so up to 50,000 of taxable profit, the 19% rate is preserved, but those are quite small levels of profits. And again, there's a marginal rate that will apply between 50,000 and 250,000 of taxable profits. So, but again, it's almost the reverse of what we've talked about, where you would expect thresholds to increase. The last time we had a small profits rate and a large profits rate, the limits were £300,000.
Right.
Up to £300,000 taxable profit, you paid at the lower of the two rates, whatever that was at the time. Up to 1.5 million, you paid at a marginal rate. And it was only above 1.5 million that you paid the large company rate. So, we've talked about thresholds remaining static, but these thresholds have actually come down massively from 300,000 to 50,000, and from 1.5 million to 250,000.
So not only has the threshold dropped, as you just said, but also the rate of tax has increased. So it's a bit of a double whammy.
It is, yes. Um, and I think it's sort of not the only place where we've seen perhaps thresholds come down. Um, just taking a wider view of the budget, we've got things like the capital gains tax annual exemption for
Yeah,
individuals, which currently sits at £12,000 to £6,000 from next April, and then it will halve again to £3,000 from April 2024. So that's another example of a threshold actually reducing.
yeah,
Potentially, as you say, it's not just the additional revenue raised as a result of that, but it's also the large numbers of additional taxpayers who are
yeah,
now finding that they've got to report ad hoc capital gains that would have
yeah. And they'll
hitherto.
have to do that through the self-assessment system, which will be completely new to a lot of those people, I would imagine.
It will, and this is on top of all the other measures such as, you know, the timescales for reporting capital gains on disposals of residential property at 60 days. So, you know, when you stand and look back to where we were a few years ago to where we are now, you've had frozen or reduced thresholds, and that's really actually causing probably a lot of complexity, additional tax payable, and additional people having to be involved in the tax system who would have been taken out of it previously.
Yeah. And then, of course, those people will also need to be working with the tax system in a making tax digital compliant way, which brings yet more complexity to all taxpayers and cost. So none of that's good news.
No, there really has been a significant complication, if you like. One of the sort of announcements from the Liz Truss government was that they were scrapping the Office of Tax Simplification, and that was because they wanted to embed the concept of simplification at every level in Treasury and government. Well, from what we've seen from the budget, I don't think that's really what has been achieved, but maybe other people have a different view on that.
And why do you think the government relies on this kind of measure, this fiscal drag, freezing thresholds, reducing thresholds, rather than just increasing the tax rates?
Well, I think I mean, people use terms like stealth tax and this sort of thing, and I suppose it is less eye-catching. You know, people do
Yeah,
pay attention to what headline rates of, say, income tax and corporation tax rates are. When people look at the UK and think, how competitive is it? How good a market is it? What if I need to send people over to the UK to work in the business and develop the business over there? How will the corporate profits be taxed, and how will the individuals be taxed? So I think in a way there's a little bit of smoke and mirrors. If you keep headline rates the same, or don't increase them by too much, and you can get away with other perhaps less eye-catching changes gradually pulling you in more tax revenues. In a way, maybe there's a nicer way of looking at it, and it's like it's a shock to have a rate of tax increased, or whereas if you just maintain a threshold at the same level, it does sort of
it's more palatable.
it's more palatable in the short term. It's more gradual, and of course, many of these measures where they've announced freezing in tax thresholds, inheritance tax, employers' secondary national insurance thresholds. That's for 5 years, but you never know. There's always the possibility that a government prior to an election
Yeah,
or an incoming government after an election might do something different. So you're not hit with a
absolutely.
big whammy in one go.
Yeah, indeed. And interesting you mention employers' national insurance, Dominic, because I think the government's own papers acknowledge that freeze or that failure to uplift the threshold is going to bring in additional revenue of I think 25 billion.
Yeah, it's a massive figure.
estimated.
That is over 5 years, and what that is the difference between the amount of national insurance that they think they will get from employers based on freezing the threshold above which the employer pays NIC at 13.8%, as opposed to increasing it in line with the Consumer Prices Index on an annual basis over the next 5 years. So that's really an astonishing amount that can be gained without actually increasing the rate or reducing the threshold. Just keep it at the same level for a 5-year period. The same period has been as they've chosen to freeze the inheritance tax threshold. And in a way, I think there's some politics there, because the idea is, again, it's difficult to say you're breaking people in gently with all of the pressures that households are facing and businesses are facing, but it does sort of defer some of the impact to the future, doesn't it? And you never know. Positive forecasts that allow a government to take a different position, in the future, or even setting a trap for the opposition parties, whereby actually they've set something out where a lot of this impact is going to be felt most heavily the other side of an election date. So is an incoming government going to actually say, well, we'll keep those same tax increases because it's financially prudent to do so, or are they actually going to say, no, we're going to going to reduce those? It's going to be a difficult situation. I think there is an element of politics combined with the economics and the fiscal policy there.
Yeah, for sure, complex, and as you say, who knows where we'll be in 5 years' time, whether we'll be having the same conversation or not. Well, thank you, Dominic, for coming in and talking through with me some of the aspects of fiscal drag and just how it has really been prevalent in recent months, and from what you're saying, may well be with us for 5 years. I hope that's been of interest to those listening. Please do get in touch with Dominic Carter or myself, Gillian McGill, if you want to talk about any of these aspects. Our contact details will be within the notes to the podcast. We look forward to hearing from you.
Thanks very much, Gilly.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.